All right, good night. Let me start the recording. I decided to do to actually record this video and put it on my YouTube channel. I'm won't be able to do the London session live, so let's just consider this, early live session, even though it's recorded. It's 7:47 p.m. Sunday, January 5th. And what I'm going to do is I'm going to create a markup, and I'm speculating on the Canadian crosses. And I'm going to start off with the major. What you do see here is USD Canadian currently at key level. You see 1.300. Definitely a psychological level that we know people would be deciding to pull the trigger. We also see that right at the key level, I don't think I see a trend line, no, I don't really see a really good trend line that's been hit multiple times. So that's currently irrelevant at the moment. But I do see at this key level is a consolidation, like a mass consolidation. So what I'm going to do, I'm just going to take off the Asian range because it's probably not going to be relevant right now because the consolidation is much bigger than the Asian range. So I'm going to just kind of group, like how we usually do in the live sessions. I'm going to group the Canadian crosses together, and we do see that USD Canadian is at this key level here. And, it all depends on, when it comes to trap trading, we know that it all depends on how it will break out, right? So, for example, London Open or New York Open, if we see, a break to the high, we'd be looking to sell because more than likely this would bring a lot of liquidity to the downside. But what I'm going to do, I'm going to then go to, let's go to Euro Canadian. We also see when you go to the daily, we can see Euro Canadian closed, this is a demand zone here, but it closed with a huge wick above this key level, a half number 1.450. And it's a possible wick fill on the daily time frame, a higher time frame wick fill. So what I am, again, possibly speculating here is they may create an Asian consolidation here. All right, so let's just put this into perspective because this is also at a key level as well for Euro Canadian. And I'm going to just throw this in here. Hold on, let me make it a little wider. Right here. All right. So we're going to just kind of go off on, let's say, a possible buyer trap, right? And then we're going to reverse engineer to see how it can also be a seller trap. But my speculation is more so in line with the buyer trap. So let's say that they do create like a tight Asian consolidation here, right? This is the beginning of the day right there. You know what? This is just educational purposes here. And we're gonna, let's say they do create like a pretty decent consolidation. They may not be that clean, but and then out of that consolidation, they do a break to the high, right? It's the same here. So let's say they come down. Now this is a much bigger consolidation, right? And they just kind of work between the consolidation. And then we see a break to the high above the key level, right? And we see some M formation. And this can be the possible buyer induction trap, all right? And why is that? Because they're all currently, this is also at a key level right here, where if retail traders see a bullish induction from this area, they definitely would be thinking of a reversal, you see. And what makes this really interesting is that Australian Canadian is also above a whole number, a key level as well, support zone. You could actually see that it's almost like they're doing like a W formation, right? So, you know, let me just get rid of the range right quick. Just kind of keep it clean. We could reverse engineer and speculate, all right, that, you know, a lot of people, and I'm gonna just, let me just group them all together, all right? So you can see it's the key levels that really kind of showing out on where the liquidity would build up. Now watch, when I go to British Pound Canadian, it's the same thing. British Pound Canadian is also right at this key level right here, 1.700. You can see. So we go to the 15-minute and look, it's such a, look at that consolidation right there, right? Sorry for doing this, but it's a decent consolidation. And let me put this in. You know, it's all about bank trap correlation here. Right there. This is really interesting. Right? And Canadian yen, sorry, Canadian Swiss is under a key level. So remember, if we think these are buyer traps, right? We see, you know, USD Canadian is, if it does a break to the high, induction out of that consolidation box and does a buyer trap and shifts, then, you know, we believe that the Canadian dollar is going to strengthen, right? So when you go to Canadian Swiss, it's interesting. It's all Canadian Swiss is also right here at this retouch the key level. So, you know, you go to the 15-minute and you can see how these key levels right now, this is key level correlation here, really are really helping to determine where the liquidity will build up in these Canadian crosses. And let me just put that in, let's say down to the bottom. Yeah, here to the bottom, that's Canadian Swiss. Whatever, I'll just put it right there. All right, so let's draw this scenario here. All right, so this is USD Canadian. Make the font a little bigger. This is Euro Canadian here, Australian Canadian. British pound, and we have Canadian Swiss. I'm gonna also type in the key levels for each one. So Canadian Swiss, this is 0.7500. All right, let's put that in right there. Key level. Oh, I want to make that a, you know, put that down at 12. Don't have to be that big. There. And then you have British pound Canadian, 1.700. All right. right there. Then we have Australian Canadian 0.900. And boom. So we see here, interesting enough, British pound Canadian is currently in a mass consolidation, just like USD Canadian. It's currently in a mass consolidation. It's a much smaller consolidation though. And again, it does not have to probably make, you know, depends on if it stays in a tight consolidation. So for example, if we see a break to the high, right? There we see a break to the high, USD Canadian, all especially at the same time, bullish inductions, London Open or New York Open. Especially with this might do a consolidation or it might just kind of be a little sloppy. And then that does a bullish induction, okay? And then we see it drop. This one may not be too much of a consolidate. It might consolidate a bit more, right? Might do something like that. And let's say, boom, they do the same thing. And it's right above the key level. And then we see that Canadian Swiss would do an induction to the low, right? And then this would bring Canadian up to this liquidity pool here. So we can see, you know, maybe I should put in the time frames, but you know, these are mainly 1 hour, you know, 1 hour and 15 minutes. Okay. So what you're looking at here possibly for Monday is we're looking at Canadian, let me make that a little bigger. Canadian Crosses bank trap correlation using key levels, okay? And so I speculate based on induction where liquidity will build up. So if it breaks to the high, then, you know, obviously you could expect liquidity to build up to the downside of buyers' stop losses, right? Same here, liquidity here. And it would give enough liquidity in the market for the market makers to, you know, increase the strengthen the Canadian dollar. All right. So you see this is a scenario, right? If we see breakouts to the high. All right. I'm going to put in the date today. And this is for Monday, tomorrow, right? And let me just put in time frames here. Sorry if it's a little boring watching me do this, but I'm sure it can bring some type of clarity to what we would be looking at when we want to reverse engineer, right? You always, it's good to choose the currency crosses that are really working on all these obvious psych levels at the same time. And for this case, it's the key levels that really show it out. All right, Canadian Crosses. Breakout to high. And that's what I'm leaning on. But remember, family, if we see this, a break to the low, right? We see all of them. For example, let's say that break to the low, and let's say this comes and breaks to the low, right? All of them go the other way, obviously, right? Then you probably would speculate something else. Okay, you probably speculate that maybe they inducing sellers, and then we see Canadian Swiss, instead of doing a break to the low, it comes above the high, above this key level, and then it traps, and then you could possibly, you know, then short it. So, you know, always be adaptive. But the purposes of this class is, of this video, is just to show you how when all the psych levels are working together, and you see that in this case, the key levels, this really, especially seeing a breakout in your favor, it really, let's say an M formation, you know, and maybe you could look at, okay, is US doing something that correlates, and, you know, Euro, but for the most part, it's good when you see all of them just working these levels like that, so you could determine what most human beings would be doing. Okay, so I just wanted to make this a pretty quick video. I'm gonna post this in the channel with the YouTube link. And again, this, yes, I did draw that out to the high, but of course, make sure be adaptive. All right, so this is for tomorrow, Monday. Let's see how the Canadian crosses work out. All right.